So welcome. As you had said, our session today is going to be navigating USDA, advancing equitable access for BIPOC women and beginning growers. But first, I have my own funders that I want to acknowledge. So this workshop could not have been possible without the generous support of the United States Department of Agriculture. And so our work is funded through a cooperative agreement with them. And in addition to that, we also have funding from USDA NIFA. So thank you to all those sponsors, and really thank you to NOFA for hosting this and organizing this amazing workshop that's been happening so far. So yay. We are around all weekend, so you'll see me outside, probably in shorts rather than long pants. But I will be outside all day today and tomorrow. So any individual questions, please feel free to come by and stop by and talk to us.
And I forgot to say, we will have a couple of breaks in between for questions. So if you'll hold your questions, we'll have some session breaks that Amanda will announce.
Okay, so first, some quick introductions about what the Carrot Project is. So we are here with the Carrot Project. You all have the slides, and I will be sending this out afterwards. So we were going to be covering a ton of ground. But I do have a couple copies of the slides here so that you can go over later on your own time. If you want to sign up for a digital copy as well, I can send that around. So please don't feel like you have to scramble and write everything down. So yeah. And so this is our mission statement. Basically, we are a nonprofit that focuses on supporting farmers on the financial and business end of their businesses. And so we serve Massachusetts, Connecticut, and Rhode Island. All right. So we know that most people did not get into farming or fishing to become accountants or business people. So we're just here to make that whole side a lot smoother, a lot easier. So we cover a wide range of services. My specialty is the USDA services, but as we'll be covering in these slides here, actually, it's in this slide here, we also do like trainings and workshops, so hands-on skills-based trainings with a cohort of other fellow growers. We have loan programs where we can serve as the guarantor. When we also have one-on-one business advising and coaching. And so one thing that I can do is I can actually assist folks who are interested in FSA programs. I can assist them on one-on-one and help them with their applications. All right, so this is me. Yeah, as the slide says, I'm your friend on all USDA things. So all Farm Service Agency related things. You can find me roaming around Connecticut, Massachusetts, and Rhode Island. I am myself based out of Providence, Rhode Island, but I did go to school at UMass Amherst, so it is quite nice to be back in Western Mass. I went to school right down the street there. In my former life, I also worked in manufacturing. So if you have any questions about value-added processing, I'm your gal at the Carrot Project. So please feel free to contact me anytime. All right, so now the introductions are out of the way, let's get started. So first, I wanted to ask, how many here are here as farmers looking to have resources specifically for their farm business, and how many people are here just as like general interest or as farming advocates? So who's here because they're a farmer or grower looking for services? Okay, so like about half. How many here are general interest, like they're looking for advocacy, policy type stuff? Okay, awesome. So like about half and half. So okay, definitely. Thank you. Thank you. That's really good for me to know. All right, so that's this question. All right, so today's agenda, we're going to be covering these topics. So it is going to be broken into three main sections. The first section is going to be a general overview of the USDA structure, an overview of the USDA programs. The second section is going to be like really meat and potatoes of how you go and actually work with FSA and on their application process. And this third section is going to be a discussion on equitable access and how more farmers can get access to all the resources that are available to them. And within that, so the USDA programs that we're going to cover in that second section is going to be loans, disaster assistance, and then the micro farm, whole farm revenue protection. All right, so before we go into how to work with the USDA, I think that it is really beneficial to first talk a little bit about the history of the USDA. So this, as you can see, is a very, very, very brief summary and highlights of the USDA. It is one of the oldest federal institutions. It's 150 years old this year, believe it or not. And it was founded by President Abraham Lincoln in 1862. So if you can see, if you think back to where we were in 1860s, there was farming, and this department was really designed for white farmers, right? And as you look throughout the rest of the history, so Great Depression, the Dust Bowl, War Food Administration, they come up with a lot of amazing programs to help farmers out, to help stabilize prices, help with getting resources out, making sure that food is being grown and distributed across the United States. But a lot of these services really are geared towards white male farmers, and that is the history of it. So 1994 and 1996 is when the modern day equivalents of what we call the Farm Service Agency and the modern day Risk Management Agency, those are formed. We're going to talk a little bit more about what those agencies are and what they do. But I do want to highlight, so 1999 on to all the way through present day, there have been a number of settlements due to discrimination from the USDA. So Pigford versus Glickman was between USDA and Black farmers. And this is for discrimination between 1983 to 1997, so quite recently, actually. 1999, Keep Siegel versus Vilsack. That was between USDA and Indigenous farmers. Garcia versus Vilsack, Love versus Vilsack. Those are for Latinx and women farmers. And then Pigford 2 is the second iteration of Pigford 1, which is Black farmers who hadn't been able to get settlements in the first round of things. And then finally, how many of you have heard about, excuse me, like the ARPA debt forgiveness? So I see a hand back there. Yeah, so that's what's happening here is ARPA, the American Rescue Plan Act, they had put out Emergency Relief for Farmers of Color Act that was about debt forgiveness. But those settlements were unfortunately stalled in court, and they're still stalled in court due to lawsuits by white farmers. So I really wanted to show here the history of the USDA because I think it gives context into the rest of our discussion. Again, USDA has done some amazing things for farmers throughout the years, but I also want to acknowledge that USDA has actively discriminated against people of color and women farmers, and to some extent beginning farmers as well. All right, so I just went over that entire slide. So why work with USDA then? So although there has been historic discrimination, the USDA has since put in place initiatives to repair that historic damage. And so some of the examples here that we're going to go over briefly, but in more detail later on. So there is reserved funding and fee waivers for historically underserved farmers. They are trying to increase the representation of BIPOC farmers, women farmers in the governance of the USDA. So through the county executive committees, they've recently formed, I think in the past couple of years, the Urban Agriculture County Executive Committee, and that ARPA loan forgiveness that from USDA was trying to do debt forgiveness. It was stalled, unfortunately, by white farmers. And finally, the USDA is just a really good resource for accessing capital and risk management, particularly if you are starting out. So USDA can fund you when commercial banks won't fund you. And so USDA really is like the place to go if you are unable to access capital in other ways. They really are there to try and support as many people to go into agriculture as they can. Okay. All right. So one of the most common questions that I get in my job is where do I go to get resources? So I find that we tend to just say USDA, but USDA can refer to a lot of different departments and agencies. And so today, so these three I think are really like sister agencies together. So the first one is the Farm Service Agency, which we're going to really focus on today. That covers financial services such as loans, disaster assistance payments. So think like monetary services. Natural Resource Conservation Service, that does conservation of farmland and the environment. So if you're looking to build like high tunnel, a hoop house, irrigation, that's who you would go to. So think like more production-based type things. And then Risk Management Agency, that is insurance for farm commodities. It gets confusing because which agency you go to and what program you apply to actually differs county to county, crop to crop. I'm just going to go over a couple examples here. So for example, let's say I want to build a hoop house. If I want to build a hoop house, I go to NRCS, but I need funding for the hoop house. So I go to the FSA. And in order to do that, so I can take out a loan in order to pay for the hoop house that is going to be built by NRCS. So that's an example of how they're intertwined. Another good example, so let's say that you are growing corn and you're growing strawberries and you want to insure those. Corn is a major crop commodity. So you go to RMA and go to the RMA products for that. Strawberries in this part of the United States is not considered a major crop commodity. So you would need to go to the Farm Service Agency that has disaster assistance payments. I'm starting to see like oh my gosh. And the third example is, let's say like you're a peach grower. So if you're a peach grower in this part of the country, we're not really known for our peaches. And so it is not a major crop commodity. So you would go to FSA and it's considered a disaster assistance payout if you were to lose your crops. If you go down to Georgia, they're literally the peach state, right? So they are going to have peaches be considered a major crop commodity. And so in that case, they're likely to go to RMA for insurance of those crop commodities. Does that kind of make sense? Like how it differs county to county, crop to crop. So this means that you do need to work very closely with your local county USDA offices in order to find out specifically what applies in your county. So the second question after I explain that is, these are federal programs, right? USDA is a federal agency. So why are these programs administered on a county to county level? So it's kind of interesting. So the FSA is one of the uniquely governed government programs in that it is run by the county. And one of the cool things about it is that there's something called the County Executive Committee, which consists of elected farmers and ranchers from the local area. And they will work alongside the county staff to decide what programs and products are most applicable for their county. So that system does have its strengths and weaknesses. The strengths are, of course, that things are very tailored to the county. And the weaknesses we're going to go over in a little bit. And then also on top of the counties, there's also the state offices. So the state offices are the ones who administer loans. County FSA administers programs. I think I might have, oh no, I didn't. So on Farm Service Agency, basically there's two halves. One half does loans, one half does programs. And it's really split like county versus state. All right. Okay. And then this bottom link, so if you're looking to work with FSA, that's how you would get in touch with your county offices through this link. All right. Now that we've gone over a very basic overview of the structure of FSA and the structure of the USDA, let's talk about how you work with the USDA. So let's get started. Okay. So the first thing is let's talk about the eligibility of who can work with FSA. So within all those different programs, with all those different loans, there are certain eligibility requirements that are specific to those programs. But there is also general eligibility. And so this slide covers the basic general eligibility in order to work with the USDA. So on the general eligibility side, the first thing is that you do need to be growing crops or raising livestock, animals, and this does include backyard and urban agriculture. So I do find that I think there is a misconception that if you are farming in an urban environment or you're farming like innovative, so like hydroponics and such, that you can't qualify. You absolutely can qualify. Definitely reach out and get those resources for yourself. The second thing is that you need to be making less than $900,000 a year, and that is in combined farm and non-farm income. So let's say like I am a multimillionaire and I decide, hey, I want to start farming. Amazing, awesome. But because I have millions and millions of dollars behind me, I can probably qualify for lending from like a commercial bank, right? So that's why there's a cap there. Is USDA is trying to serve those who might not be able to access capital elsewhere. The next eligibility requirement, you do need to be either a US citizen, a non-citizen national. So that's someone from like, I think it's like Guam, Puerto Rico. Well, actually, I think Puerto Rico is a citizen, but it's like the US territories is what it's referring to, or a documented legal permanent resident. And finally, the last eligibility thing is that you cannot be raising crops or livestock that are prohibited by federal law. So unfortunately, cannabis, I know it's legalized in some states, it's not legalized federally, so that unfortunately can't qualify for USDA programs. And then endangered species. So I can't be raising like tigers and go to FSA. That would be pretty cool. But unfortunately, no. So additional eligibility. So for loans, they're looking for something called commercial intent. So you need to be growing with the intention of actually selling the products. So like if I'm growing just for my family or for my community, I'm probably not going to be able to qualify for those because yes, question. Compost. I'm actually not sure, but that is a good question. I can follow up on that. Yeah, I can follow up on that. Oh, that's amazing. That's awesome. Yeah, yeah, I'll definitely look into that and see if you can. Because I know that it's like farm, sorry, it's like fiber or food is sometimes what they use as the criteria. But yeah, I can definitely look into that. All right. So the next thing is you need to be making at least $1,000 a year. So that's kind of like the baseline for how they know that you're selling commercially is that $1,000 threshold. So that's on loans. And then on program side, again, you need to be growing with commercial intent. That being said, on the program side, it does not matter if your business is for profit or nonprofit. So sometimes nonprofits will have like a social enterprise arm where they're like, so let's say like it's like children are growing like a youth garden, and some of those things they then sell at a farmer's market, something like that. They could then go to the program side and be able to get like some kind of disaster assistance if they were to lose all the crops. Um, okay. Uh, yes.
Can you sell something? Can you grow the crops and then turn the crops into something and then sell that instead of the crops?
Like value added processing.
I guess I don't know the term.
Yeah. So for value added processing, um, that should be like that is allowable. But what some of the things that you could get for a loan would not be. So, for example, like if I was to go for a loan, I couldn't get a loan for like manufacturing machines. I couldn't get a loan for like a kettle or something that I would process like salsa. So let's say I'm growing tomatoes, making salsa. I couldn't get a loan for the processing of those things, but I could get a loan for like the harvesting and other things because that is when it moves from an agricultural commodity over to something else. Does that make sense?
Yeah, I think so. I would be, I'd like to contact you, but
Oh yeah.
I would probably think about growing the crops, turning it over to something shelf stable and then selling it.
Okay. Yeah, definitely. Like that's a definitely like a not as typical of like most farmers. But definitely like I would love to talk to you afterwards. So like definitely, yeah, let's get in touch. All right. So we just covered the eligibility. So the next thing is how to register yourself. So before you can do anything at all with the USDA, you need to register for something called a farm and tract number. These farm and tract numbers are not tied to the individual farmer, they're tied to the land itself. So if I was to purchase land that already existed, that was already farmland, when I go to the FSA office, it's just transferring that number over to me. I'm not getting like a new number. And so when you go to the FSA office, these are the things that you're going to need to do. So first of all, you're going to need to find your county FSA office because they're the ones who are going to process that information. The second one, I don't know if it's changed now, but due to COVID, a lot of offices did require prior appointments. So I would just recommend calling ahead of time instead of showing up and then being turned away. So third one, if you own the land, you need to bring the deed to the land. If you lease the land, you need to bring the lease to the land. And then, so really what it is you just need to prove that you have the legal right to farm or grow on that land. Number 5 and 6, you need to bring personal identification documentation. So that's like a government issued photo ID, like a driver's license, a passport, something like that. And then taxpayer identification number. So this depends on if you're farming by yourself or you're farming as like a business. So if I'm farming by myself, I would bring Amanda Chang's social security number because my business is operating under me. If I was farming with like a business, I would bring what's called the EIN, which is like employer identification number. So number 7, likewise, if you're an entity, you want to bring your business documentation. the most important thing on top of, so within this, you also need to make sure that you bring documentation to show that you can sign on behalf of the business, because they want to know that like, oh, me and my business partner, we're both in agreement that I am allowed to sign and register. Okay. And finally, last thing, just to emphasize again, backyard and urban gardens and farms are eligible as long as they meet the general eligibility. Okay, awesome. So now let's talk about what counts as beginning women and BIPOC farmers. So for a beginning farmer, this means that you have less than 10 years operating a farm. You can have more than 10 years of farm experience, but you cannot have like been the like main operator of the farm for over 10 years. So sometimes in like practical terms, that means like owning a farm, filing a Schedule F on behalf of your farm. That's usually what that means. And then for socially disadvantaged, so this means American Indians or Alaska Natives, Asians, Black or African Americans, Native Hawaiians, or other Pacific Islander, Hispanics, women of any racial background, and that currently, unfortunately, does not include non-binary. I am not personally really a fan of the term socially disadvantaged. That is the USDA term, so that's why I'm using it here. Some of these terms I know are a little bit out to date. The rest of the presentation, I'm just going to be saying BIPOC, so Black, Indigenous, people of color. But for this particular side, I did want to show what the USDA terms are. So for these, you do need to self-certify your identity. So that means that when you go in to fill out your farm and tract number, and you go into the county FSA office for the first time, they're not going to assume anything. So like if I walk in, they cannot just assume I'm an Asian American woman. I have to actually state on my paperwork, I am an Asian American woman and I would like to be counted as an Asian American woman. If you self-certify, you do qualify for a couple of special provisions. All right, so I know a couple of slides back, we did say, right, like USDA has had historical discrimination. So why should I willingly say that I am an Asian American woman, for example? And the reason is because if you self-certify as these categories, a number of different things open up for you. So the first one is dedicated pools of loan funding. So every single year, the loan funding will run out of general funding. Dedicated pools means that you are not competing with established farmers or white male farmers for the funding. Like they're going to hold that funding available to you. So all that funding is reserved for beginning farmers, women farmers, BIPOC farmers. There are two other categories: limited resource, meaning that you're making under a certain amount of money. And there also is, like if you're a veteran, that's also another class that you can pull the pools from. The next one is extended access to loan funding. So if you are, so regularly, you can only qualify for some loans for a period of 7 years. So after your first loan, you are only eligible for those FSA services for 7 more years. If you self-certify within these classes, you have extended access. So you can do it up to 10 years. If you're BIPOC, it's forever. Like I'm not going to suddenly become like white or Black or anything else, right? Like, like I can continue to tap into these special provisions. Fee waivers for disaster assistance. So for example, there's something called the non-insured crop disaster assistance program. Normally, in order to get that, you need to pay $325. If you self-certify, that's $0 that you would need to do. So essentially, it's a free program that you might be able to get payments for. And then higher payouts. So an example is ELAP program, that's for honeybees and livestock. Normally, the payout is 70% of the loss. If you self-certify, you can get up to, I think, like it's like 90 or 95%. So it really is in your advantage if you fall into these categories to self-certify. You get access to some good resources. Okay. All right. So something that I tell all of my farmers is I tell them definitely ask for a service receipt. So this is your right. I say definitely create a paper trail for yourself. So that paper trail is going to include things like the date, who you spoke to, what you talked to about. And this really helps you in case you're bounced from agent to agent, or let's say you're interested in USDA programs, but then for another year, like you sit on that thought and then a year later you come back. This gives you a good record of what you talked to. And it's good, just record keeping. Additionally, if there's ever an issue, which I hope it never happens to any of you here. If there's an issue, these service receipts will also really help back you up. So let's say you were denied a loan, but you did exactly what the loan officer told you, but the loan officer gave you false information. Now you have a service receipt to back up that you did what you thought was best. And so again, like these are just really good tips that I think everyone should know when they start working with USDA. Definitely get yourself a service receipt. These service receipts also are available at most USDA agencies. So FSA, NRCS, Rural Development, all of them should issue this receipt. Okay. Questions so far? Yes.
If I guess I have two questions. One, I noticed LGBTQ farmers are not currently included in that list. And then the second question, if our business is 50-50 owned between two people and one is a woman and one is not, does that affect your eligibility for this funding?
So we'll talk a little bit more about the paperwork and some of the requirements, and I also don't want to like be asking you in front of everyone. But for things like that, they will also ask things like family status. So some of the programs require everyone to be related by blood or marriage, for example, because they're looking for family farms. So without wanting to ask too much in front of everyone, it will depend on the specific program, and it depends on the familial status. And it also depends too on how exactly the partnership is. So if it's like just like two friends versus like we have like an actual like LLC, like that also will change things. So we can definitely talk afterwards. I don't want to grill you in front of everyone. All right. Awesome. So let's dive into the FSA loans and programs now. Okay. So this is a quick overview of the loans and programs that we're going to go into. So for loans, there's microloans, direct operating loans, direct ownership loans, down payment loans, and guaranteed loans. On the program side, disaster assistance programs, there's conservation programs. And so again, it gets confusing, right? There's Natural Resource Conservation Service, and now FSA also has conservation programs, but they also have their own conservation programs. Facility storage loans. So again, confusing, right? It's a loan, but it falls into the programs, not the loans. There's also organic certification, which might interest people here since we're at the NOFA conference today. And then the food safety certification. So for today, because CARET's focus is on financial services and financial resources, we are going to focus on the disaster assistance program. But for the rest of them, if you go to farmers.gov, you can find that information, or you can come talk to me afterwards and I can direct you to the right place. Alrighty, so loans. This is an incredibly simplified breakdown of these loan offerings here. I'm not going to go into this in a lot of detail. You can have this as reference. Again, there's copies there. I can email it out to you afterwards, so please don't feel like you need to take down notes really quickly. But how I have it ordered is in general by order of how much money you can get, which also corresponds to how complex the loan will be. So a microloan, for example, you can get up to $50,000, and that application is 4 pages long. The direct ownership or the direct operating loans, you can get $400,000 or $600,000, but that application is like 28 pages long, and you have to have way more paperwork. And so the order of how I have these is basically the order in which you would also graduate out. So when you're first starting out, you're going to start with microloans for the most part. Then you graduate to an operating loan. Then you have enough of a successful business to buy your own farm. And then the down payment farm ownership loans or the guaranteed loans. So guaranteed loans, I think it goes up to like almost $2 million because that you would get a loan with FSA and like a third party lender. So this is kind of like the order in which you graduate through the loans. Okay. Regardless of the loan, each loan is going to be pretty individualized. Each loan has its own application requirements and process for how you do it. But there are 4 main questions that you should prepare to answer. So the first one is, why are you asking for a loan? So for this question, what they're really getting at is like a very specific thing. So how I usually explain is this. If I go to them and I say, hey, like I want to get a tractor, they're going to come to me and say, what type of tractor, what model of tractor, right? So you can get tractors for $30,000 or you can get a tractor for $100,000, right? So they want to see that like you've done your research, you know exactly what you are looking for. Another thing too is they cannot write like blank checks, for example. So I also cannot go to them and say, hey, I want a loan for $10,000. They're going to ask, what is that $10,000 for, right? So that's the first thing that you want to be able to answer is, why are you asking for a loan? The second one, how is your current farm business doing? So they're going to ask for paperwork or financial records to show how your current farm business is doing. So like, let's go back to the example of the tractor. So let's say I go to them and I say, hey, I want a $100,000 tractor. They're like, okay, cool. Like, you know exactly what the tractor, what you want for. Their second question is, so how is your current farm business doing? And I say, well, I've only sold about $5,000 of product over the past few years. They're going to look at me and say, why do you need a $100,000 tractor for, right? Like, it's very unlikely based on the fact I've only made $5,000 in the past 3 years that I can pay back a loan for $100,000. So that's the second question that you want to be able to answer. Third question, kind of in the same vein as number two, is are you able to pay the loan back? So I find that sometimes there is like almost a misconception that the USDA loan programs are like grants. So with a grant, you go, you ask for the money, but you don't need to pay the money back. FSA loans are still loans. So even though they might have lower interest, even though they might have more favorable terms than what you could find from a bank, it is still a loan. So you still need to pay it back. So if we go back to that example of like me making $5,000 a year, but I want a $100,000 tractor, I am very unlikely to make that loan back, right? I would be paying it for so long, and then the interest would be would just be collecting and collecting. So that's something that they're going to be asking for is, are you able to pay the loan back? And then the final question is, are you able to get a loan elsewhere? So FSA is a government program, which means two things. So it means one, they are not trying to compete with commercial lenders. So if you are able to get a loan with a bank, if you're able to get a loan with Farm Credit East, they're going to encourage you to go there first so that they can reserve the funding for those who are not able to access the USDA loans. And the second thing is, as I said, like they're here to support those who can't get capital elsewhere. And so in the past, they've sometimes asked people to show a rejection letter. Now they're not as strict about that, but it is something that they still want to know is whether you can get funding elsewhere. All right. So this section, I'm not going to go into all the different paperwork, but these are examples of things that you want to be able to show. Ultimately, it depends on the type of loan and the complexity of that loan. So as I said, a micro loan, you don't need all of this, like you don't need all of this documentation if it's a micro loan. It's a 4-page application. But if you're asking for $600,000, you better believe they're going to be asking for your tax returns, your last year's production, your 3 years of past financials. Like they're going to be asking for a lot more paperwork. I think the biggest takeaway from this is be prepared for the questions to get very personal. With these things, like they are going to ask a lot of personal questions. So in the example that I had, they're going to ask about your family status. Some programs, again, are designed for family farms. So they're going to ask, are you married to your business partner? They are going to ask, do you have student loan debts, car debts? Do you have, one of the things that they will look for is they're going to look for a credit score. They don't have a threshold like credit score, but they will ask if they see that you had missed payments or low score, why is that? Can you tell me like a reason why? They're going to be generally, I think, pretty sympathetic. So if you say like, oh, it's because I've had health issues or I've had something else, they can try and work around it. But again, that's a personal question. And I think too, they're also going to ask like, do you have non-farm income? Those are all questions that they might be asking. So I just like to preface this by saying like, just be prepared that the questions are going to get personal. I know sometimes like farmers go and it's a little shocking to start like, I came in for a business loan. Like, why are you asking all these very personal questions? But it is something to just be mindful of. Yes.
You need to be selling crops that year, or can it be a projection?
Um, I think it will depend on if you have farming experience prior. So if it is a projection and you have no farming experience in the past, that's going to be different than you are a new farmer, you just bought your own land and you have a projection, but that projection is based on like previous experiences that you've had. So one of the questions that they will ask again in the like personal questions is, do you have farming experience? What was your schooling? If you don't have farming experience, did you go to agricultural school? Did you go to business school? Like all these things to show that you know a farm business and you know how to like basically have a successful business. Does that answer your question?
Yeah, I think so.
Okay. Yeah. I know all the questions have basically been, it depends. But yeah, it is very individual. And I am here again, all today, all tomorrow for these individual questions. Okay. Alrighty. So now let's talk about FSA loans versus other loans. So benefits and differences. So FSA allows you access to capital if other capital is unavailable. So like recently I was talking to a farmer who was like rejected by Farm Credit East, for example. They would then be like the next step would then be to go to FSA. Another benefit to FSA is because again they're trying to help as many people go into farming and be successful. They tend to charge lower interest rates than other lenders. So that's something to its advantage. And then the final thing is they do have continued support. So when you work with FSA, be aware that you are going to be working pretty closely with them for the duration of that loan term. So it's not like they write you the check and then you're done and you just kind of anonymously pay it. There is going to be an annual review. They will have agents continue to check up on you. And so like I have heard people kind of describe it as like it's a little more hand holding than like some other banks because like they are there to try and support and make sure that farmers are successful. Similarities with other loans. So as I said previously, it is still a loan, so you'd still need to pay it back. As with other loans, it also means that you have to have something called security, otherwise known as collateral. So what this means is that however much your loan is, you need to have security for at least 100% of that loan, up to 150,000, up to 150%. So if I take out a loan of $10,000, I need to back it up in case I'm unable to pay it with $10,000 to $15,000 worth of things. Usually that security is whatever you're using to purchase it. So if I'm using it to purchase land, the security is the land. If I'm using it to purchase a tractor, the security is the tractor. But it is something to just be aware of. It is still a loan. It still comes with all the trappings of what a loan is. And finally, there is still risk involved. So if you can't pay it back, USDA can foreclose or take the collateral. And that's part of the like debt forgiveness and all this stuff that we've seen in the news recently. So before you do that, definitely I recommend like talk to the county and the state offices like sooner rather than later because they will try and help you like find ways to like alleviate the situation and make sure that like you are able to be a successful business. But I also want to be realistic and say like there is still risk involved. So I saw the hand go up first and then the hand.
So if they close on somebody's land, then do they do some kind of auction? Does that mean the USDA sells?
I actually am unsure what the process is afterwards. I think it depends probably on what the security is. So like so if the security is on crops or the security is on farmland, that's going to be a little bit different in how they handle it. It also will depend on the exact state that you're in. So even though these are federal programs, like the security laws, I think depend state to state. The real estate laws depend state to state. So I think I would recommend talking with like your local county.
I just remembered I did Google it one time, I think last year. They were
Okay.
selling some big land in some places. They were auctioning. And some of them were like in state parks and stuff. It was weird. It was like supposed to be protected land. And they were selling this big spaces like in Alaska and Wyoming. I remember now that I found the part in the government website where they were auctioning. And some of them were like hundreds and hundreds of thousands of acres that they were selling. For cheap too. Some of them were like $1 million for like 600,000 acres.
Wow.
Yeah.
Wow. Yeah. I'm almost wondering if that's like other programs too, because like the conservation programs I talked about, sometimes they'll take land out of they'll take farmland out of use. So like there are other programs too. So maybe that's it.
Related to that question, is there a marketplace that's geared toward that it helps folks think about purchasing equipment, maybe less land, more about equipment? Is there a foreclosure funneled supply, so it's cheaper? So it's great equipment. Unfortunately, it's resulted from a foreclosure, but now it's in a marketplace for folks that are very much in this space, looking to also benefit from perhaps lower costs, things like that. And is there a general foreclosure rate across programs, or maybe the microloan program specifically that you're aware of?
So I am not aware. I'm actually not sure. I wish I knew what the numbers were. And that's actually something we're going to talk a little bit about in terms of equitable access. Is like, well, if we know the rates at which different demographics are foreclosed on, that is a big thing. And I also don't think that they really like advertising that they foreclose on things. So unfortunately, I don't know. In all my research, I don't know those rates. In terms of like a marketplace too, I'm actually also not sure, but that is something that I can ask about. There are also like other like farming organizations and like farming things. So I'm thinking, for example, like Southern New England, so I'm from Providence. There are like farm forums where people can like sell and trade. So there are still resources, even if it's not like foreclosure based. Yeah, I hope that answered your question. Yeah, question.
One of the slides mentioned tax returns if available. Could you clarify that, please?
Yes. So if you are starting out, sometimes folks don't have tax returns. And instead, so in lieu of those tax returns, and this is specifically for microloans, they will ask instead if you have a production record, so you're able to estimate generally how much you're growing. Sometimes too, what they can do is they can ask if you have like a W-2. So like, let's say I'm just starting to get into farming. I'm using some of my off-farm income to like invest into my business. And that $900,000 cap that I talked about is farm and non-farm. You can use like my personal W-2s to help make up for the tax returns. Something like an operating loan. So if I'm asking for hundreds and hundreds of thousands of dollars, at that point, like a tax return would be required. It also is dependent on how many years you have. So a lot of these programs will ask for 3 years worth if you have it. But if you have like 2 years or 1 year, that is something that you would need to then talk specifically with your loan officer, because there might be other paperwork that can like provide the same information. Okay. Any other questions while we're here? Yes.
Fiscal agent.
Uh,
Fiscal agent.
so like someone else to prepare.
So my situation, we have a funding that is administered by a fiscal sponsor or a fiscal agent, because we have a nonprofit status pending.
I
And
see.
so we're not yet 501c3. And so we receive funding through another nonprofit that essentially they're like our pseudo treasurer, if you will, right? They are the entity that received the funds and manage the funds. So technically on paperwork, we didn't receive the grant, even though we did.
Got
It's
it.
this other qualifying entity.
Yeah.
So what if you have the paperwork of this other entity, but really you're the entity applying for the grant?
Yeah. So that's definitely like that is something that like I have thought a lot about, and I've like talked with a lot of agents like about is like what to do with nonprofits, because and like I don't want to jump too far ahead, but one of the things is in talking about equitable access to these programs, nonprofits, these programs are really not designed for nonprofits, and nonprofits have a very different business structure, a very different funding structure. And so the eligibility of nonprofits for these programs can get a little tricky. It depends on the exact structure of that fiscal sponsorship. It depends on like, it really will depend. I think that it's probably best for us to just talk offline, because it will depend on the exact business structure. So yes, you can. Yes, you can. Yep. So if you're a sole proprietor, so for those who don't know what sole proprietor means, it means that I'm doing business as myself. So like I'm doing business as Amanda Chang. I would provide my social security number as the when I'm registering for a farm track number. So yes, you can. Okay. Any other questions before we move on? No? All right, so the next thing is disaster assistance programs. So these programs I had mentioned earlier, it really depends county to county, the availability. So some of these programs so not all of the programs are available in every county, and some counties have like unique programs. So for example, Rhode Island had like a random asparagus program one year that was specific to asparagus. And it was just that one year. So definitely, yeah, so like these are just like a smattering of different ones. I will be focusing on the non-insured crop disaster assistance program that is available everywhere. ELAP, which is Emergency Assistance for Livestock, Honeybees, and Farm-Raised Fish. I think that's also available in most places. I think it is available in most places in New England. And then some of the other ones are very specific to like if you're a forester, the emergency conservation program. So the conservation programs we talked about, you need quite a lot. Well, you don't need quite a lot of land, but you do need land that you're willing to not be farmland and other things. Sorry, actually, no, I lied. That's a different program. Emergency conservation is if there's a natural disaster and you need to make the land back. That's what that is. I apologize. Livestock indemnity and livestock forage. Those are if you're losing, say, cattle, for example, because of the drought that's been happening. Okay. All right, so as I said, program availability differs county to county, crop to crop. So the number one thing I say is get yourself registered with your county FSA office so that if a program suddenly becomes available, like the asparagus one in Rhode Island, you will be able to get contacted by the agents and you will be able to qualify and apply for those. Some general things to be aware of. They have to be related to weather. So this means that it can't be for animal related damage. So let's say I have like a field of lettuce and a whole family of deer just came straight through and ate up that whole acre. Well, in that case, I can't qualify for this because they're going to say I should have probably put up fencing or something else, right? It has to be weather related events. And then finally, disaster assistance payouts will be counted as taxable income. And I just like to tell people that just so they're aware. So as they do their accounting throughout the year, they should be aware that that will become taxable. All right. Finally, so unfortunately, disaster assistance. Yes, question.
Any kind of demonstrate for this program or?
Yes. Yep. So we're going to go into those. Yep. So for disaster assistance, so unfortunately, it cannot cover 100% of your loss, but it can get you through to the next season. So even if you can't recuperate 100% of the loss, even if you can get like 50% back, that gets you at least to the next season and be able to survive. So it can't be the difference between surviving. All right. So this is, I know this is a lot of text on this slide. Basically what this is it is a crop insurance-like program. So what this means is it is by the crop. So before the planting season, you put in a certain amount, just like with insurance, right? Like you put in a payment, hope for the best, and then if something bad happens, you are then able to get some money to recuperate the costs. And so for this one, it is $325 per crop, unless you self-certify as beginning, BIPOC, women, limited resource, veteran. And then those are the maximums. I won't go into the numbers here. So to answer your question about the reporting, it depends program to program what those record-keeping requirements are. In general, you want to track how much you're producing. If you have like our livestock or a rancher, you want to track how many heads. So you want to track your inventory. You want to make sure that you are accounting for all of your animals. And you also need to have like really good accounting for like if you lose anything. So if you lose your crops, there are reporting deadlines for when you need to let FSA know. So I can't like lose my crops and then 3 months later, then I'm like, oh, I lost my crops. They're gonna be like, well, prove it, right? Like, so you need to notify within a certain time period. Reporting requirements it does depend program to program. Okay, so there are certain deadlines too. So yes, question.
Disaster relief count for, like, right now there's a lot of invasive species. If there was a beetle, like for example, the Asian lumber beetle, whatever, if the disaster is from a invasive species, does that count as a?
Yes. So in that case, the invasive species needs to be tied to a weather-related event. So let's say like there's been a really, really, really damp and muggy season, and like your tomatoes just get like fungus or something on it. Like in that case, plant disease, you can tie it to the weather. If the invasive species is because there's been a drought and there's a bunch of invasive species that have sprung up because of the drought, then yes, that would qualify because it's tied to a weather event.
Like not that the beetle, lantern beetle or whatever, that's come now.
I think it would depend. So it would depend on the reason why. Yes. Sorry, actually, sorry. I think you had a question first.
So you need to have registered before the planting season. So if you're succumbing to a drought now but didn't register, it's kind of tough luck.
Unfortunately,
Okay.
yes. Because if you think like insurance, right? Like, so my medical insurance, I pay in before I break my leg. If I break my leg and I haven't paid for insurance, I'm out of luck. So this program is crop insurance like because it's using insurance type.
Seeing the fee is waived, it's if at some point you do, never mind, it's not. Okay. All right, yeah.
Yes.
So there's a maximum of $825 per county. So if you're high intensity like market garden agriculture, would that cover all of the the massive diversity of crops that you have? Would you be able to
Yep.
apply for each of them? Okay.
Yeah. So it is each. So one of the stinky things about this program is you have to apply per crop. And so we're going to talk a little bit about like why that is a little bit later on. But these programs are kind of designed for places like Idaho or Kansas where you have 100 acres of one crop, not necessarily like you said, you're very intensive and you have like a bunch of different crops. But the nice thing about us is there is still this maximum of $825 per county.
Yes.
So if you have many, many different crops, and you don't fall into any of those categories that you can self-certify for, then you maximum only have to pay $825 per county. Okay. Yes, question.
And so in that case, in the case of that maximum, the initial fee is, it could be that 825. What does it mean, the initial fee? I guess it's wondering.
Yes, so that is the fee that you pay into before the planting season starts. So when I am applying for this program, I'm going to apply and say, like, these are the crops I want to apply for. So let's say, like, I'm a lettuce farmer. I'm going to say, okay, like, I want to apply for my romaine lettuce. I want to apply for my iceberg lettuce, 325, 325. And then I would pay that before I even plant the romaine or the iceberg. Does that answer your question?
Waived each year, so long as it's initial from the perspective of planting.
So the waived is if you fall into like a beginning category or you fall into like BIPOC or women. That's the only time when they would waive that fee. So like let's say like I am an Asian American woman and I want to insure my iceberg and my romaine. I would normally have to pay $650, but because I self-certified, I don't have to pay anything. So it's really worth putting it in because I don't need to pay anything. And if I lose my crops, now I get a payment.
Just seems really valuable, so I want to make sure I understand.
Yeah,
As
yeah.
a beginning farmer, 10 crops I wish to cover, at that rate, I would crest over the 825. That would be the max, but then it's waived anyway.
Exactly.
Beginning farmer.
Exactly.
Next year, still a beginning farmer, it's waived again.
Yes.
And then if there's additional coverage that I could elect, and then it would be a sort of payment structure for that.
Yes. So the additional coverage, so like the basic payout and the premium payout. So basic is considered catastrophic. So it's 50% of your crop yield at 55% average market price. So that means that like if I insuring 100 acres for simplicity, they would pay me at maximum for 50 acres at 55% how much I should have gone on market. Premium coverage. So if you can self-certify any one of those things, if I want to bump that coverage up, the additional fees I would need to pay is a lower amount, but I still need to pay something for that premium coverage. Does that answer your question?
It does. Okay. So that's the additional coverage. It's just
Yes. Yeah, so you start at basic, and then if I want to pay for extra coverage, even if I fall into those like special categories, I still need to pay a little something because I'm asking for more coverage.
I'm sorry, the questions are kind of flooding, and I don't want to monopolize things, but one I think is also relevant for general audience is that a guideline on how you plant? So if you have the tomato example, if I'm actually, instead going to space 9 inches and that creates a disease issue, you know, like what's the driving factor there on you know, circumstances that are out of your control versus some that are
Yes.
prescriptive, like, well, if you're in this program, this is how you need to do it now.
Yeah, so they're not going to be so specific as to say, like, hey, you need to plant it this specific way, but you do need to show that you're using good farming practices. So some things too, like, and this is a lot of detail, but like they will send agents out to make sure you actually are planting what you say you planted. You actually are doing what you say you did. So like they do still want to make sure that you are farming like with good practices. So I'm going to quickly move on. So emergency assistance for livestock. So for this one, this is not crop insurance. This is disaster assistance. So this means that you don't need to apply ahead of time. It's only when one of your animals is lost, you would notify FSA about that loss. And then throughout the year, it accumulates, accumulates, accumulates. At the end of the year, if you exceed the mortality threshold, then you can get a payment, like a payout for it. But you don't need to put anything in from the beginning. And so for this one, to go back to your example of like good farming practices, so for honeybees, for example, like they will check to make sure you've treated for varroa mites because they want to make sure that you're like not negligent in losing your crops or your livestock because of negligence. So they are going to ask for production records. Yeah, so we still have a little bit to cover, so I'm going to just keep moving on. But definitely, if there are some questions about NAP, this is ELAP, come talk to me. Like I'm more than happy to talk. Okay, so this next section is crop insurance. So to answer your question, and I think we had talked a little bit about the fact that these programs are really designed for like Idaho, Kansas, Wisconsin, hundreds and hundreds of acres of like one or two crops, right? And so traditional crop insurance, NAP and ELAP are by the crop or livestock. That doesn't always apply if you don't grow a major commodity. Or like if you're very diversified, which a lot of farmers are in New England. In that case, there's also something called whole farm revenue protection, and specifically the CARE can help you with what's called micro farm. So micro farm is crop insurance where you pay ahead of time, and then if you lose stuff, you get like some kind of payout. But all of your farm stuff is under one policy, so you apply for one big thing. The caveat is that you have to make less than 100,000 to qualify for micro farm. It is a simpler application than the regular whole farm revenue. Regular whole farm revenue, there's not the $100,000. You can be over that. So this is another thing that is available. It's not through FSA, it's through insurance. So I think in the handouts that Julia, who is my lovely coworker, hello, she had handed out, that goes over the differences between crop insurance and disaster assistance. Okay.
Really quick, is the $100,000 in sales?
Yes, so it's gross income. Yep. All right, so working with FSA. So we just talked about like how to do it, but I wanted to just highlight some common stumbling blocks. So number one, to answer your question back there, is record keeping, record keeping, record keeping. So even if right now you don't think that you want to go for FSA, but you're thinking about it in the future, start building your records. So some programs are going to ask for historic production records. How have you been the past 3 years, either financially or your production? They're going to ask for those things. So if you're even thinking about going into work with Farm Service Agency, start building the records for yourself. Start keeping good records. The next thing is deadlines. So these are massive federal programs. So that train is going to leave the station whether you are on it or not. So definitely pay attention to the deadlines. The last thing I want is for you to lose out on a payment because you accidentally put it in 96 hours past the loss rather than the 72 hours that they require you to notify the loss. So just be very, very, very careful to check the deadlines. On the loan side, I just want to do a quick highlight. You need to finish the application within 30 days. And so if you start a loan application, you need to finish it within 30 days. Otherwise, they kick the loan off and you have to start the whole process again. So I just want to highlight that. Okay, so the other thing is plan ahead. So FSA is incredibly understaffed. And like these are really big programs, right? Like there's a lot of paperwork, there's a lot to be done. So you really want to plan ahead. Some loan approvals can take upwards of 6 months, depending on the complexity of it. So if you're thinking about it, start talking with us, start talking with FSA sooner rather than later. So you want to just really plan ahead. And then on the disaster assistance side, you want to register yourself before disaster strikes, right? So in the example of like right now, so if you had known and planned ahead, right, first of all, if you had known about the programs and applied in the winter, now that there's a drought, you would be covered. But unfortunately, you can't apply now. Yes.
Just to ask a question that I think is going to underscore the value of this program. As a beginning farmer, if you had applied for this, it's effectively whole farm insurance that you're not paying.
So not for whole farm insurance, that's different. The non-insured crop disaster assistance program is, for that one, it is by the crop. It is by like the individual crop.
And if you list every crop that you're growing, it then effectively becomes whole farm insurance for no cost to the beginning farmer.
Yes, essentially, yeah.
That's incredible.
Yeah, I can see your eyes are like lighting up.
Wish I knew.
Yeah, yeah, definitely. We can chat and I can like get you set up for next year. All right. So final thing on the loan side, if you're looking to construct something, you have to do an environmental, historic, or tribal review before you construct. So if you start construction before they do these reviews, they will automatically forfeit your application. So it doesn't matter how perfect your application was, they will automatically deny it because they have to make sure that you are not building on tribal land. They have to make sure that your construction won't impact the surrounding habitats. And they also need to make sure that it doesn't affect any historic markers. And so, like, just something to be very, 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 very careful of if you're looking for a construction loan. Question?
The construction, like building a farm, like how, like a barn or?
Yeah. Yeah, so if you're looking to build like a silo, a storage unit, a home, a barn, like something that requires like breaking ground, you would need to do that review.
What if somebody already bought a farm and they already built the barn, but they didn't register as a farm?
Can you repeat the question?
It's so, yeah, bought a farm. I don't think he ever registered that he's a farm. He hasn't planted anything, but he did build a structure, like some poles and
Yep.
a roof.
So this only applies if you're asking for the loan to do the construction.
Oh,
Yeah, yeah. So in that case, like it's already there. Like,
yeah.
but it's like if I go to them and I say, hey, I want to build a farmhouse, then they have to do these reviews before they can approve the funds to then build a farmhouse. Does that
Yeah.
answer your question? Okay, cool. All right. So this section. So I really hope that if you work with USDA, everything goes beautifully and smoothly. But if things don't go well, these are some tips to just so you are aware of them and have them in your back pocket. So number one, don't be afraid to ask questions. Don't be afraid to ask questions. So you can either ask those questions of like an ally, like ourselves, the CARE Project, other nonprofits, university cooperative extension programs. There's a lot of resources out there who really want to make sure farmers are getting everything that they possibly can and are doing the best that they can. If your loan is rejected, that rejection letter will contain information about how to seek an appeal. And so that is an avenue that you can go towards. And then finally, if you feel that you have been discriminated against for any USDA program, you do have the following rights. So you can contact the state FSA office, you can contact the federal USDA office, you can file an official discrimination complaint, or you can contact your local congressional representative. And I have heard of that happening because USDA ultimately answers to Congress. And that also is not the order in which you have to do things. Like I guess if you wanted to, you could go straight to your congressional representative. But these are the different options, and I want to highlight them here because I want you to know, like there are options. Like these are the things that you have a right to. All right. So I'm just going to quickly leave this slide here for a few seconds, but these are the different resources that you can go to for the loans and programs. So the USDA website, they have a number of fact sheets. There's loan guidebooks. So if you go outside to the Care Projects display, we have all those guidebooks there. And then you can also locate your county office right here. Okay. So in summary, so number one, you want to register ahead of time with your county FSA office. Second one, loans. Loan approvals are highly dependent on the exact situation, exact risk. So as I was kind of bouncing around, I'm like, what was the exact business structure? What is your family background? It is going to be very dependent on the program and your specific situation. Disaster assistance. So program availability will vary county to county. Get in touch with your county FSA office for more info. Micro farm, whole farm revenue protection. This protects your whole farm rather than crop by crop. Climate change is making extreme weather and the potential for crop or livestock loss more common. So the CARE Project, we strongly recommend to all of our farmers, even if you haven't considered it in the past. I mean, just look at the past couple of years, right? Like even this year, there's been a drought. We really recommend that you seriously look into risk management options to either disaster assistance or crop insurance, especially since some of those offerings are like free for you, right? So definitely, we strongly recommend this to all of our farmers. Keeping good records is essential to accessing capital and protecting against loss. Self-certifying as a BIPOC, woman, or beginning farmer, and this also includes limited resource, which is, I can't think of the exact dollar amount, but there is that option, or a veteran farmer, can broaden or increase the funding and payouts and can lead to fee waivers or reductions. Use the resources available to you. And finally, shameless plug. I'm here, the CARE Project is here. We are here as a resource, so please call or email us anytime. All right, any questions right now? Yes. I'm free. I'm free, actually. So please, like, don't call me at 4 a.m., but 4 p.m., call me. All right, any other questions? Yes.
If you're working on like an incubator farm setting up, or whatever it's called in your particular case, does the USDA count that as you being a farmer? Can you use that as collateral,
Definitely, yeah. So definitely, like, they're not looking to see that you own the land. What they're seeing is that you have the right to farm on that land. So if you have an agreement with that incubator farm, that's all you need. In fact, a lot of incubator farms, a lot of land trusts, they sometimes have those farm and tract numbers on hand already. So they've already registered. If you go to FSA, it's just making sure that that number is like attached to you.
Even if it's not registered, though, you did that for like say a year, and now you're applying as a beginning. Now you're looking to lease land and go off on your own.
Yeah,
You can use all of the information, and the USDA will look favorably on that.
Yeah, that's definitely farm experience, right? Like
Right.
you have farmed on an incubator farm, like you were like the operator of that farm. That definitely counts as experience. Yep. Any other questions before we switch gears to talk a little bit about policy and equitable access? No?
Just so I don't miss an
Yes.
opportunity again, I need to ask the question. So if there's a quarter acre in winter squash that the drought has just eliminated everything out, without having first registered or getting a typical insurance policy, there is no program that would help out here. It's a loss.
Yeah, not for crops, unfortunately. So if it was like you had 100 goats, that's a different thing because the program for like animals basically is ELAP, which does not, like, you don't need to pay ahead of time. So because it's like vegetables and fruit and stuff, like, yes, unfortunately.
Got it.
Yeah. Yes, question.
Just to respond to that as well, there may be like more local resources available in that situation, which is not through USDA to the center. So reach out to folks in the area. There might be other like disaster response type bridge funding.
Thank you.
Yeah, thanks so much, Julia. This is why we're a team. All right. Okay, so let's switch gears now. So where are we now and where do we want to go? So I just spent like, I don't know, 75 minutes talking about how the programs are as they currently exist. And I want to support you in getting all the resources you can with the programs as they currently exist. But let's talk a little bit about like how to broaden in, how to make sure that like everyone has access. Okay. So this is the slide that I had up previously, but let's flip it now. So let's think, if this is who can work with FSA, who might not be able to work with FSA? So let's just think about like, what are the barriers to working? So I saw a hand just shoot up.
Yeah, because I live in Worcester and I have a garden and not backyard, it's actually front yard. But Worcester is not a right to farm community. Therefore, I can't say I'm a farmer even though I have a front yard garden because I don't live in a right to farm community.
So my answer to that is USDA is a federal program. So in their eyes, if you are gardening and farming, you can register. So you can register that front yard of yours.
Yeah.
Sorry. Have been some policy changes where you can have a garden now and sell your garden. There are new policies. So it might not be like right to farm, like that language, but there's like some urban agriculture code that just passed like right before the pandemic started, like around that.
All right.
Yeah.
Yeah. So then like definitely thank you for sharing that. So I want to emphasize that these are federal programs. So even if there are like municipal or state barriers, like that doesn't always apply for the USDA thing. So definitely like if you're discouraged by one thing, like definitely don't think it automatically applies, but vice versa as well. So some things that you might be banned from for USDA. So let's say, for example, if you're growing cannabis, you can't access the USDA ones, but you might be able to access some state ones. So it goes both ways. Question.
I was just gonna share that at the USDA, I think it's 1,000 square feet. If you're growing in 1,000 square feet, you can be considered a farm in the eyes of the USDA.
Yeah, I think I have 6,000.
So definitely like, thank you for sharing that. They have historically used 1/100th of an acre as the barrier or as like the threshold. They have since like really started to change that. Now they're saying like no farm is too small. And it's in recognition of the fact that there's more and more urban agriculture, there's more and more vertical farming. Like, how do you measure an acre of hydroponics, right?
Yeah.
Yeah, so they're starting to actually move away from that, which is really, really cool. Yep. But thank you. Yeah, that was like what it was previously. So okay, so looking at this, anything that's popping up to people as like, if this is who can work with USDA, who might not be able to? Yes. Exactly. That's a big category, right? So if you're undocumented, you're as with a lot of other government programs, this unfortunately is also one that they would not be able to. I'm just going to kind of fill in the gaps. So one thing here is nonprofits. So nonprofits have a bit of a trickier time sometimes with these programs because they're not designed for nonprofits. So with programs, like they're eligible for programs, loans, I have not heard of a nonprofit successfully getting a loan because they are unable to answer the question, how am I going to pay this back? Since nonprofits are so dependent on grants, which aren't like stable. So that's like that would be a barrier here. And if you're growing just for your community, you're just growing for your family, unfortunately, you can't access these programs as well. So, all right. So here, so on top of this, like some other barriers and complicating factors. So I'm just going to go over these. So for barriers, that's something that's like that we think actually is like a barrier. And then complicating factors, sometimes it can help and sometimes it can't. But before I do this, I forgot to say, so again, I want to thank the USDA. So I work pretty closely with USDA. I really thank them for like their funding for this cooperative agreement. And they've been really great partners to work with. And I think, again, like USDA does some really amazing things. But I do want to say that this section and on, these are our opinions. So I just want to like quickly emphasize that. Okay, so some barriers. So number one is imbalance of power. So Definitely when you walk in and there's just so much stuff that and so many things that you're trying to figure out. Sometimes like you can feel that like it's a little nerve-wracking sometimes to go into these situations. Second one, kind of along with that, is asymmetric information. So there's a ton of things. Like if I didn't know that I could register as a beginning farmer, hopefully the FSA officer is telling you, hey, maybe you can qualify for a beginning farmer. But if you don't know that, you don't ask that, they don't tell you about it, how are you supposed to know that you might be able to waive a fee or something, right? So there's asymmetric information, record keeping requirements. So that happens sometimes is like you go in and you say, I'm ready to work with USDA. Turns out you should have been keeping your records all this time. That's something that I really, really wish that they would share like openly, like you should really start keeping your records earlier. Language barriers is another one. So they do have translations of different fact sheets. Those translations don't always get updated as quickly as possible. So sometimes that means there's a lag. Staff on site, sometimes they don't have staff who can speak different languages. So that's a huge barrier right there. And then finally, lack of diversity in USDA staff. Yeah, I'm gonna be pretty frank. Like all the officers that I've worked with, I think every last one of them that I've personally worked with has been a white officer, and that can be pretty intimidating as a person of color going into that space. Same thing if all of your officers are men and you're coming in as a woman farmer, that can be pretty intimidating too. So that's definitely like those are barriers that we see. Complicating factors. So local decision making. So this can be a good thing. So if you have a really amazing county executive committee, they can be your best advocates. But the opposite can be true. Sometimes they can also not be as helpful as they should be. With how individual loans are, so dependent on the individual situation, so dependent on the exact ask that you do. That means that the loan approval can sometimes be subjective, and that can also be a complicating factor. Sometimes it's a good thing. Sometimes it cannot be a good thing. And then finally, complicating factor. New England farms tend to be small and highly diversified, and we also tend to have direct-to-consumer sales. The payout amounts sometimes are not tailored to direct-to-consumer prices. So those average market prices oftentimes are based on the assumption that you're selling wholesale. So that means that sometimes in New England, the payout amounts are far, far lower than is actually applicable. So that is something to consider as well. Definitely not to discourage. It's better than no money at all, but it is also a complicating factor. Okay, so opportunities for advancing equity. So these are just some of the recommendations for what farmers can do now to advance equity and make sure that everyone has access. So here we say, have more BIPOC women and beginning farmers register with the USDA. Get yourself represented. Show that, like, so right now, I think in some counties, it's like 1% of all farmers is BIPOC. I don't think that's true. I think that there's a lot of farming happening, but it's not being represented. So definitely register, get yourself represented, get those numbers up. So along with this, more BIPOC women and beginning farmers to fill out the agricultural census. That's another huge accounting. So in the same way that you talk about like the population census, same thing happens with the agricultural census. It comes around once every 5 years. Small, highly diversified farms file crop acreage reports and report sales prices. This will help make those payout amounts actually reflect what farmers are getting in New England. And then elect diverse representation to county agricultural committees. So the folks that you have lead you, why not have them look like you, right? Why not have them understand your troubles? So that's something too that farmers can do right now for themselves. Okay, so these are things that the USDA is currently doing or can do. So increasing the number of urban county executive committees. So in the past couple of years, they have released, I think it's 17 urban county executive committees. Only one of them is in the Northeast, and only one of them, I think it's in Brooklyn, New York. So there's actually none in our neck of the woods. So that's definitely something that I think is definitely an opportunity for advancing equity, is just getting the non-urban counties up. Right now, too, farmers are having to travel from cities all the way to like pretty rural county offices, and that can sometimes be a barrier, especially if you lack transportation. Okay. USDA hires more staff of color. communicates opportunities through snail mail or phone. So a lot of communications happen by email. Not everyone has access to email. So that's something that can also help get the word out. USDA translating more materials and increasing the availability of those translated materials, another huge one. USDA technical service providers, such as the CARE project, increase our capacity for business technical assistance and trainings. So I know farmers don't have time. So definitely come to someone such as ourselves who can help you go through the paperwork much faster than if you were doing it on your own, right? So that's something too that USDA, if they're able to get more staffing, they're able to get more funding, they can also assist farmers much more than they're currently doing right now. Okay. So to answer your question, I think you had a question on foreclosures. Releasing statistics for loan approvals and denials, payouts, foreclosures, and seizures. I think that this would go a really long way to figuring out who is getting foreclosed on, who is getting their loans denied. There was a pretty striking article that came out to show loan denials, and yeah, it was really, really, really striking. It was 30% more denials or something like that between Black farmers and white farmers. But that was something that I think the reporters had to ask USDA to release. It wasn't it was already released. So things like that I think would also help just give more transparency into the process. USDA improves transparency in the back end process of these programs. So things like you need to fill out the application within 30 days. That's not something that you can find readily, but it is really helpful for farmers to know. And then greater attention for national office, ensure counties are equitably distributing resources. Is another one. And I can talk a little bit about this more at a later time. Finally, so things we can advocate for. So Farm Bill that includes more programs relevant to New England. So the Farm Bill is this massive, sprawling piece of legislation. I don't know how much familiarity people have with it, but it is just a huge, huge, huge thing that comes around every 5 years. And New England just doesn't have as much of an agricultural presence in these conversations. So something that we can definitely advocate for is more New England specific or New England relevant programs. Okay. Another thing that we can definitely advocate for is to remove commercial intent as an eligibility requirement. And that will definitely open up the number of people who are eligible for some of these things like disaster assistance payouts, for example. Okay. Expand eligibility requirements for loans beyond a family farm. So some loans some requirements require you to be a family farm. So if we can expand that definition out, I think that would also be a huge thing that would be helpful. Another thing we can advocate for is greater gender inclusivity in socially disadvantaged category. So right now, women are in that category, but if you check off non-binary, unfortunately, you are not considered socially disadvantaged, which we're not going to go into super detail right now, but yeah, yeah. Oh, I'll just leave it at that. I think people can hear the agreement in the room, the nodding. I can see all the nodding for those of you at home right now. Yeah, so that's something that can definitely advance equity. Increasing funding opportunities for non-commercial growers and community groups. So that gets to the question of nonprofits and the availability of these programs to nonprofits. Okay, and finally, more programs and funding for specialty crops. A lot of these programs are really favored towards the major crop commodities. So grain, corn, I think chickpeas, sunflowers, these major commodities. Having more programs available for specialty crops would also go a long way, especially towards helping New England, where we do tend to grow a lot of what they consider specialty crops. All right. Any questions about the equity, access? Yes.
So imagine the USDA has a large pot of money. I'm hearing you say that some of it for these kind of free categories is the women BIPOC and beginner is reserved. So the other one gets depleted, but there's this, within those three buckets, are they separate buckets or is it just one pool, general pool?
actually not sure if it's separate buckets.
It seems like if it isn't, then
Yeah.
especially with information about success and failure rates and really kind of to drive some of that and make sure it gets into some good places and addresses some
Yeah.
underlying equity issues.
Yeah, that's definitely like a really good point. And like that's definitely a question that I want to know now is like if it's like beginning is one category, women is another category, and BIPOC. My guess, and this is just my speculation, is it's BIPOC and socially disadvantaged. Because like socially disadvantaged would be women and BIPOC together. But I also don't know because there are other categories for limited resource and veterans. I also don't know how those play into it. So that's a good question. And like, yeah, it's definitely something that I want to find out about. That's a really good suggestion is if it's all one pool, separating it out also might make it a little more equitable.
Yeah, but then what about the people that fall into all the categories? Like
Yep.
getting women, that is a,
Yeah. So there is so for that, like you don't have to pick and choose between your identities.
Yeah.
That would be like so wrong if you had to choose, right? But in that case, uh, so beginning only lasts you for 10 years. Being like women or BIPOC can last you for a lifetime
Yeah.
if you continue identifying that way. And so for that, in that situation, if you do qualify for multiple things, like in that case, like it doesn't hurt you. Like, yeah. Any other like thoughts about equity? Anyone's experiences that they want to talk about or share? So how much time do we have
We are
at time?
1 minute.
We have 1 minute. 1 minute left.
Just like to say thank you.
Oh my gosh! Thank you all for
Thank you.
coming.